This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show, no fooling, on April the 1st, 2011 at 8:43 in the morning. That's Mountain Time, 10:43 Eastern Time. Our show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a show, you can catch us on Harold's website, HESradio.com, HESradio.com. The shows are archived there. Next week, our show in Edmonton will be running Sunday at 10:30 in the morning, just before the Edmonton Oilers' final game of the season, as they will not make the playoffs and hope for that first over pick overall in the NHL draft. So next Sunday in Edmonton, show normally runs at 3, will be on at 10:30 in the morning. Harold, it was a very interesting week in the financial markets. Of course, sovereign debt crisis spilling over from Portugal into Ireland, and that's a scenario where Ireland is in very, very dire straits in my mind.
Oh, you better believe it, Randy, and they're not the only one. But it was a good week in the market, all in all. You know, at the beginning of the year when we made our predictions, we predicted certain markets would hit certain prices, and one of the markets that we predicted was silver was at $30 in January. We predicted that silver would hit $38, which would be the low of the higher numbers that we're looking for the year. And then we predicted that by the end of the year, we'd see possibly $48 to $50 silver. We're very comfortable with that, but I don't just arbitrarily pick these numbers. If you've noticed that we've hit $38 silver twice already this year, and both times silver has backed off. So that $38 number is a very important resistance number for silver. I'm very confident that we're going to break that number very soon. I'd like to see two closes above $38. Then we should get a quick run to $41.50. Again, we ultimately believe that we'll see a repeat of what happened last year, and at the end of July last year, silver was only at $17, and 90 days later finished off at $30. So we saw basically a $13 increase in silver in 90 days. So I believe that we're going to see another strong run. Once we break $38 silver, which is a very important number, we should get a nice run to $41.50, and then we'll see the market do what it normally does during the summer. Then after July, we could see a very nice run all the way up to $48 to $50 silver. So we're very excited about what's happening in the metals markets. Now, silver started the year at $30. It's at $38 now. Gold is basically where it ended the year. So we've seen more than a 20% increase in the price of silver so far this year, but gold has not followed suit. So we need to see two closes above $14.50 in gold, and then we should see a nice run in gold that should take us up to short-term $16.50, $18.50, and possibly by the end of the year $2,200. I do recommend that if your RSPs are sitting in mutual funds, that you look to put your money in your RSPs into physical gold and oil. We've been pushing the oil market and recommending oil for a long time now, but we are very, very strong at the beginning of the year saying that you need to get into the oil market. And basically, oil is trading at $107 today. $107. We've seen a big move in oil this week. Oil's trading 32 cents higher today as we're taping the show. But again, we feel that oil will hit $150 sometime this year, and by next year we could see $250 oil. So again, we're looking at the inflationary markets are really starting to pick up steam. The fact is that one of the major reasons why we've recommended so strongly the hard asset market, gold, silver, and diamonds, is primarily because we anticipate that the next major scenario is going to be inflation. We saw this coming 10 years ago. That's why we started recommending gold when it was at $250 and silver when it was at $4. Nobody ever believed that the metals would move as much as they did, and nobody believed that inflation was going to come back. We firmly believed it. That's why we recommended it to all of our Canadian listeners. John Embry felt the same way, and so did guys like Peter Schiff. So all in all, the fact is that 90% of the money is made by 10% of the people, and it's only 10% of the people that are in the markets that we've recommended. And again, I can't tell you how happy I am to see that our Canadian clients are doing so extremely well in these markets, and we're going to see unbelievable price movements coming into these markets over the next 2 to 5 years. So again, continue to hold on to your positions. again, I do not recommend speculating in these markets. I don't recommend buying and selling and getting in and out of the markets, trying to catch peaks and valleys. If we do get any pullbacks in the market, which we do get from time to time, I'd very strongly recommend that you buy more silver when the markets pull back. Again, we've seen times where silver has pulled back $3 or $4 or $5, but that's normal for a market like silver because you've got two sets of people that really trade these markets, investors. One that trade the futures market short term, and two are the longer-term traders that bought the physical metal, which is what we do. So basically, the short-term traders that are in and out of the market, they're trading at very heavy leverage. And that's where you see the market will pull back $2, $3, and again, then see the markets come back very strong. All we want to be concerned about is the trend is our friend, and the trend for the market is substantially higher. In fact, with what I see coming in the horizon, which is massive inflation, way more than what we saw back in the late 70s, early 80s, we're now thinking that silver could, before this whole thing is over, could be $150 to $200 metal. There's shortages in the market. It's an industrial metal, and it also reacts to inflation. So I still believe that silver, out of all the metals, is the strongest metal to own, and I still think that we could see 500-600% return higher in the silver market than where it is right now. Again, we also love the oil market. Oil markets are getting high right now, and again, if things slow down or get a little better in Libya, it is possible on a short-term trade that we could see oil pull back to maybe $95, $98. But ultimately, there is a shortage of oil, and there is no doubt in my mind that we will see substantially higher prices this year and next year. But the problem is that high oil prices are extremely inflationary. You may have heard on the news that Hershey's chocolate, by the way, just increased their prices on chocolate by 10%. The thing is that the price of sugar is skyrocketing. So is corn, wheat, soybeans, coffee, and cocoa. All food prices are skyrocketing, as is oil prices, at a time when people are tight on money. And that's the real inflation. Not the stuff that they try to sell us with the U.S. government, that they exclude food prices and oil prices in their inflationary numbers. That makes absolutely no sense to us whatsoever, because we drive, we heat our homes, and we eat food. And if you're making an income that is set, if you're making $50,000 a year, but the cost of living is going up so substantially, that's inflation. And that's what we're looking at, and there is absolutely no doubt in my mind that we are going to have massive inflation, that we will see interest rates eventually up to 20 to 25%. And Wall Street doesn't want to hear that. And the best example that I can give you is that on Thursday night, after work, I came home and I turned on CNBC. And there was one of my favorite people. Peter Schiff is one of the most brilliant people that I've ever known, and he's very, very bullish on the markets that we're bullish on. So he's very well known, and they were interviewing him, and they asked him about silver, and he was saying basically what we've been saying. Silver's gone up over 20% this year. It looks phenomenal. He owns it himself. He believes the market's going substantially higher, well over $100. And they really started to try to beat this guy up. They tried to embarrass him. And they said, well, why do you think that silver's going to go higher? And he said it's an industrial metal, which is good for the recovery, but it's also a metal that responds to inflation, which we're definitely going to have. And they said, well, you know, interest rates are going to go up, and what's that going to do to your almighty silver? And they really started hammering this guy, and he was as cool can be. He says there is no way that the Federal Reserve is going to raise interest rates enough to bring down the price of silver. He says, and they're not going to raise interest rates because it will hurt the almighty stock market and the real estate market. And then they rushed him off the show. It was so embarrassing the way that they treated somebody of the stature of this guy, Peter Schiff. So all in all, again, it was an amazing article, and it just, again, reinforces in my mind how Wall Street is so separate from everything else that is going on in the real world. And in most cases, your financial advisor will never advised to you to buy hard assets, gold and silver and diamonds type of thing. But now some of the most brilliant minds are coming out and agreeing with us. You're finding that Richard Russell is coming out and saying the same thing, and he said it for a long time, gold, silver, and diamonds. And now another top analyst came out and said the exact thing that we're saying. So, again, I couldn't be happier that people of this caliber are coming out and now confirming what we believe was happening 10 years ago. So all in all, we want to continue with the same scenario. Continue to buy silver. If you get any type of pullback in the market, buy more of it. This market's going to at least $100, possibly $150 to $200 before this whole thing is over. And again, inflation is now the major thing that we need to watch out for. And we know that in the United States, they will not raise interest rates enough to have an effect on the market. And don't forget, back in 1979 and 80, when they were raising interest rates substantially, silver and gold hit their highest price when interest rates hit 20%. So again, I'm not concerned about them raising interest rates, but I know they're not going to do that for 2 or 3 years. So we got a long time of still making money in the hard asset market before we see any major downturn.
Well, if they raise interest rates, guess what? They're going to be paying double the interest on the debt that they have, and they have massive amounts of debt in the United States, and they're paying billions in dollars of interest. They'll pay billions more, and that's one argument for them not raising interest rates. Just wait until quantitative easing ends at the end of June and see what the markets do. That will be a really good indicator of whether or not they do raise rates. The telephone number to invest in precious metals, 1-866-623-2002, 1-866-623-2002. Harold recommends a company out of Western Canada, Vancouver, Worldwide Precious Metals. That's the company that he recommends, the only company to do business with when it comes to investing in precious metals, gold, silver, platinum, palladium. They're there to help you manage your precious metals investment account. You can trade the market if you want, buy or hold your metal. They're there to help you maximize profit, minimize risk. They're the experts in this very specialized market. They've been in business over 10 years. Throughout this entire bull market, they've been through all the ups and the downs. Stay away from people that are just selling you something. They're not trying to get you to invest in this market, which we have a long-term view on. They're just trying to sell you something. Invest in this market with people who know the market, and that is Worldwide Precious Metals. WWPMC.com, their website, WWPMC.com, the telephone number 1-866-623-2002. And don't forget, if you are in Edmonton, you listen to our radio show next week. We will be on Sunday, not in the afternoon, but in the morning at 10:30 in the morning. One thing I wanted to touch on before we get to speaking about silver, jobs numbers coming out in the United States this morning, and the job number is 8.8%. A lot of people don't believe that. In the past, numbers were bantied about of 20%. I know Gallup, they keep track of unemployment. They had a number recently of over 10%. In the U.S., they added 216,000 jobs. It was interesting. David Rosenberg, in one of his commentary pieces during the week, said that according to ADP, that is a firm that keeps track of job numbers as well, only 18% of the jobs lost in the United States have come back. And I know a lot of people get excited when they see these numbers, but how many people are actually out of the job market altogether? They have given up. We do not know. But we do know that in the United States, things are not good. In fact, there was an article by Stephen Moore in the Wall Street Journal. It was on the Drudge Report this morning. More Americans work for the government in the United States than manufacturing, farming, fishing, forestry, mining, and utilities combined. In fact, 22.5 million, and that is the number working for government, compared to manufacturing 11.5 million. And that is almost an exact reversal of the situation in 1960. There were 15 million workers in manufacturing and 8.7 million collecting a paycheck from government. But you can see how government has become so predominantly an overriding force in employment in the United States, and that cannot be good. And obviously, it's something that we'll keep track of. You can get our newsletter and read the information that we have this week that talks about the job numbers. The telephone number to receive our newsletter free of charge, we send it out via email every week free, 1-866-623-2002. On the silver side of things, obviously, Peter Schiff, as Harold was mentioning, was on CNBC. Jim Cramer from CNBC, and I know that Harold's not a huge fan, but he came out this week, and we have it in our newsletter, the article and the video. You can watch Jim Cramer saying, buy physical silver. You heard right.